Broken new ground today for Garden City, which will house a 50,000 square metre retail centre, over 420 apartments and commercial offices. Now, the first phase of development and opening for business in late 2014 will bring 33,000 square metres of prime retail space to the city. This very key development for East Africa in the retail space. So let's get into it. Kome Gekunda, investment principal at Actis, joining us from Nairobi. Kome, thanks for joining us today. So, as I said, an important development on the retail front, much needed retail space for those looking to expand into the area. But I'll leave you to tell us more about this specific development, a $250 million development.
Yeah, thanks. Garden City is it's a pioneering mixed-use development, 9 kilometers from the central business district of Nairobi. It's on a 32-acre parcel of land that we acquired about 18 months ago. We broke ground today. And as you say, it consists of a large regional retail mall, 500,000 square feet, 420 apartment units, offices, a hotel, and a significant leisure component. And it's a development that we're proud of. We did it on the back of significant infrastructure investments by the government, specifically the expansion of Thika Road and the transformation of that road into a highway, which is catalyzing a lot of middle-income migration into that node.
And you've got a consortium of investors here, Aspire Group and Mentor Management also investing. So tell us about how the project has been funded and the ownership structure.
I won't get into too much detail, but just to clarify what you said, Actis is the cornerstone investor in this project. Aspire Group and Mentor Management are our development platforms that will be the development managers and the project managers on the project respectively. We own a controlling stake in Mentor Management and work very closely with them on Garden City as well as other projects in the region. And they effectively do the upfront planning, the consents, the leasing, and the execution of the project.
So when it comes to flagship clients, of course, that is always key when it comes to new retail centers. So do you have any specific clients that are going to be opening up shop in 2014 with you?
Yes, and this is indicative of, I think, the pioneering nature of the development as well as the market potential in that node. We have leased about 50% of the space, which is a great place to be at groundbreaking. Some of the anchors include Game, who will be opening up their first store in Kenya. We have Nakumat, who are taking up a large box as well. We have other sub-anchors including Thailand Carpet, Century Cinemax, who are opening up a 4-screen cinema, and a number of new entrants to the market, such as the first MAC cosmetics store in East Africa. So the reception's been great, and I think that's a function of, one, the market, and two, the product.
When you have discussions with South African retailers who are wanting to get exposure to Africa and grow their retail presence, they always talk about the cost of the retail land, and I suppose you're developing it for them and letting it out. So is it going to be more or less expensive for those who have put money into actually buying the property where they have those retail sites?
Yes, that's true. I think it will be less expensive for them. I think their occupancy costs will be, sub 20%. We hope. I mean, there's a big difference between West and East Africa in terms of the cost of construction. It's a lot cheaper in East Africa, and by consequence, the rents are lower, but it averages out in terms of your yields. But we're seeing a lot more serious engagements from South African retailers looking at the Nairobi market, and we expect to see more. I think Garden City has been a good litmus test for the things that will come over the next 12 to 18 months. Game's presence, for instance, is a big coup for us and the country, obviously. They've been working to come into this market for a while, and we're pleased to have them on board on Garden City.
more broadly, you've got the Africa Real Estate Fund. So how much is left in that to deploy when it comes to real estate developments in Africa? And where do you see the next potential node that you're looking to invest in?
We closed the fund, the second fund, the Africa Real Estate Fund, late last year. We had, prior to that, been aggressively building a pipeline, securing assets, securing land, and doing the development planning. So we're well into our way on deploying the capital from the second fund. I can't speak to when exactly we'll be in the market next, but we are building a pipeline as well in Kenya and the rest of our markets for a subsequent fund.
So then very quickly, is retail going to be a key cornerstone of your portfolio of investments? Do you see this as the important sector for you to focus on?
I think it is. I think if you look at most of these cities, they're very fast urbanizing. We talked today about a statistic where Nairobi doubles in size by 2030 in terms of population. It'll be an 8 million person city according to the UN. So the potential is there, not just in Nairobi, but also in tier 2 and tier 3 cities. So retail will continue to be a key part of our thesis. But I think as these markets mature and become more competitive, you have to be a lot more distinctive in terms of the product that you put out. So for instance, on Garden City, not only is it a large regional dominant retail center, but it's in a mixed use context with significant and really interesting leisure components as well. Mm-hmm. So I think that the markets will get more competitive and we all have to step up our game.